Probably had the experience of taking several trades and all trades leading to losses, and then you now start wondering whether your strategy is working or not. Now, in this video, I'm going to share with you one of the reasons that this happens to a lot of traders. The first thing is most of them are not putting into perspective that before entering a trade on the smaller time frame, you need to understand the overall market structure, whether we're bullish or whether we're bearish. And after understanding the market structure, the second thing is to understand the areas of low resistance and high resistance liquidity. Because if you're trading off an area that is a low resistance liquidity and you're trying to hold that trade for too long, price could eventually reverse to run the low resistance liquidity, and your stop loss most likely is resting right there. Example is right here. You can see this low right here. This is a low resistance liquidity because even though price went to the upside, when we came to the downside, we failed to take liquidity from the previous low before we rallied high, and we took liquidity from the previous high. This high right here is a high resistance liquidity, and the reason for that is because we took liquidity from the previous high before we went to the downside. So the liquidity resting right here has already been mitigated. So price coming back to this high, there's a high tendency, a high probability, as long as the trend on the intraday levels is to the downside, the low resistance liquidity is going to be the next draw liquidity, and price is going to find it difficult to gravitate above this high because this high has already taken liquidity from the previous high before dropping to the downside.